Hey everyone, Vertiv Holdings is scheduled to report quarterly earnings results on Wednesday, July 24th. This will be its second quarter of fiscal year 2024. So I'll preview what investors should look for from this AI company when it reports earnings. I'll also answer if I think investors should buy this stock before it announces earnings or to wait until after it announces earnings to consider adding shares to your portfolio. There's a lot to cover, so let's dive right in.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the big highlight from Vertiv's latest quarterly results was a big increase in orders. Vertiv reported organic orders up 60% compared to the first quarter of 2023, while net sales only increased by 8%, up to $1.639 billion. But that big increase in orders suggests demand is now scaling for Vertiv Holdings. First quarter operating profit of $203 million was up 42% from the first quarter the year before. So revenue only increasing 9%, but operating profit increasing 42%, suggesting the company is generating good economies in scale. And those results were so good that the company is raising its full year 2024 guidance. It now expects net sales growth of 12% at the midpoint, with operating income closer to $1.2 billion and adjusted operating profit of $1.3 billion, which was an increase of 28% at the midpoint compared to the full year in 2023. Interestingly, in the first quarter, revenue only increased by 8%, but the company is expecting for the full year revenue to increase by 12%. So it's expecting quarterly sequential improvement in revenue for the rest of this year in Q2, Q3, and Q4, so that in the full year, revenue growth ends up at 12%, even though it's only started at 8%. So that means the company is really expecting to ramp up in the second, third, and fourth quarter of this year. And with orders up 60% year over year in the first quarter, that's reasonable to expect. Management said that we are seeing order patterns with longer lead times based on customer build schedules, largely in 2025 and beyond, suggesting that artificial intelligence is starting to scale. Though still in its early stages, AI is quickly becoming a pervasive theme across our end markets. Continued advances in GPU development and other AI-enabling technologies are necessitating changes and upgrades to the critical digital infrastructure. And that's the story I've been seeing across the board. All of these hyperscalers discussing expanding their data center footprint, upgrading existing data centers, infusing them with artificial intelligence, and then building new data centers foundationally built on artificial intelligence. So the digital infrastructure really expanding quickly and by the billions of dollars, driven by artificial intelligence, and Vertiv in a position to benefit from that trend. Management also said we are in the early stages of unlocking the potential of this business. The data center market remains extremely positive for the foreseeable future, and Vertiv is well positioned for growth and operational improvement over the long term, which supports our capital deployment strategy and enables us to invest in long-term value creation while also returning capital to shareholders. And I agree with management. This data center build-out, expansion, upgrade is not just for 2024 or 2025. These companies are planning investments in data center expansion all the way out to 2030 from some of these companies that I'm following. So the data center build-out is really in the early stages. They really only started it in 2023, right after the launch of ChatGPT and the proof of concept of how popular it was with consumers and what it could do to help business improve productivity. They really just went all in starting 2023, and it just got started, right? So 2023, 2024, early innings. You're going to see several years of deployment of this technology, deployment of this capability because of the potential. I know you might be thinking, this AI thing has really been hyped up, but it's because of the capability. It's because of the improvement. Software developers, coders, can become twice as productive, 3 times as productive. I've heard even more productive than before without these large language models. And that's just one use case. There's several other use cases like chat bot assistants, where companies can now dedicate an AI chatbot for customer service instead of having people on the phones and having people on the chats, and that's reducing costs. It's improving customer service because these AI chatbots can be more informative than customer service agents, right? Imagine you can't really train a customer service agent on all the information around your company, about your company, but you can train an AI bot to know almost everything there is to know about your company and about the customer's relationship with the company. And so if a customer has a question, that AI bot can do a better job answering the question than a human customer service agent can in most cases. So you're lowering cost and you're increasing the customer service. You're increasing quality of performance. And so that's why this is really just now getting started. And there's going to be other use cases. That's going to be the next leg of growth for artificial intelligence investment. The large language model is really just the tip of the iceberg. There's going to be others, and I'm most looking forward to the discoveries in healthcare, the cures for diseases, etc., that potentially come out from these artificial intelligence investments, because they can accelerate the learning, accelerate the testing, accelerate discovery, and all that can bring back better results, which will then fuel more investment, which can then bring in better results. All right, for the second quarter, the company is forecasting $1.9 billion in sales with organic net sales growth of 12% at the midpoint, adjusted operating profit margin of 17%, 16.9% to be precise at the midpoint. For the full year, as I mentioned, they're forecasting organic sales growth of 12%. So in the first half of the year, based on 8% in the first quarter, and they're forecasting 12% in the second quarter, that means in the first half of the year, they will have had 10% revenue growth. Then they're forecasting 12% for the year. For the company to deliver 12% on the year after delivering 10% in the first half, they need to deliver 14% growth in the second half of the year. So we're noticing that increase, right? First quarter, 8%. Second quarter, they're forecasting 12%. The third and fourth quarters are going to be higher than 12% for the company to meet this forecast. And since they've got all this backlog in orders, it's reasonable to assume they will hit these targets. Now, Vertiv Holdings stock is trading at a forward price to earnings of 29. So it's not cheap. It's on the more expensive side of where this stock has been, going all the way back to 2022. So to answer the question, should you buy the stock before earnings or after earnings, or should you buy the stock at all? I would say this is one of those stocks where we can wait to see what we get from earnings. Let's see if they're making progress on that forecast. Let's see if they raise that forecast. Let's see about orders. Is order growth still 60%, 50%? If we see all of those numbers come in line or better, and the stock price remains where it is, then I think it would be a good time to buy. But we don't want to make any decisions before we see those earnings results. So let's wait. Let's get the earnings results. I'll have a review for you here, and then we can decide whether or not the stock is a buy after we get those earnings results. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.